Well, the private world has come to the public markets. We've heard about private equity and private credit plays that are now available to public market investors. But how do you figure out how to navigate that world? It's our focus of Hot Picks today. And joining us to talk a little bit more about the world of alternative investments through the stock market is Ken Leon. He's an analyst at CFRA. Ken, great to have you with us. And maybe you can, first off, just remind us, it feels to me like definitely over the last decade, and maybe it was because the private equity firms themselves came to the public markets, that there's now this sort of growing intrigue around the private world on the stock market. What's the landscape like overall?
Oh, it's great to be here. And just to frame the conversation for investors, we have an overweighting on the financial sector. When you look at this particular area, it fits into asset management and custody banks. Three areas: the public mutual fund companies, custodial banks, and the third is alternative asset managers. In that area, we have seen tremendous success. And when you think about participating in these type of companies, the opportunities historically started in private equity. But as we will talk about, fundraising and size of assets under management has grown rapidly into areas like private credit. And of course, there's other areas like real assets. So we cover the 8 largest alternative asset managers, and it's really exciting to see where they are and where they're going to grow.
Okay, well, that's really helpful context, Ken. So let's get through some individual companies, starting with Blue Owl Capital. Owl is the ticker symbol in New York. I've had a chance to talk to the co-founder and co-CEO on a number of occasions over the years. They were in the headlines recently because they have been able to be part of a big financing deal for Meta, the parent of Facebook, as part of its big data center building push. Tell us a little bit more about Blue Owl.
So Blue Owl, very interesting company. We're talking about assets under management, $284 billion, mostly tilted to private credit. They're really one of the best in terms of execution, creativity, and structuring. And within the area of direct lending, they've moved aggressively into digital infrastructure and data centers. So I think that's what you're referencing to. Additionally, when we look at the opportunity for private credit at large, which Blue Owl would participate, the market size today is about 1.3 trillion, expected to be 2.7 trillion by 2027. So Blue Owl, kind of a second-tier player here, if you can feel that $284 billion is small, but it really isn't.
All right. Another company that CFRA has a buy rating on is Ares Management, ARES. Tell us more about that one.
So Ares, bigger than Blue Owl, $572 billion of assets under management. We have a $205 target price. They are a leader in terms of areas of direct lending within private credit. What we've seen and benefiting Ares or Blue Owl has been the size of these deals for direct lending has moved up to well over 500 million to $1 billion. They're mostly not, the misnomer here is these are not junk or high yield, low credit risk. These are mostly investment grade. And the borrower is just looking for flexibility and someone that fully understands their business. And in many cases, there's collateral, for some areas of direct lending. So Ares is also a little bit more broadly focused to the opportunities like larger players like Apollo, which we have a buy, which is Europe, which has still a immature alternative asset private credit market, yet 90% of companies in Europe over $100 million aren't even publicly traded.
Really good context there. And then finally, Carlyle Group, which some of our regular, we're partners with Bloomberg. People might know David Rubenstein, one of the co-founders of that firm, who spends a lot of time interviewing high-profile people. But, his roots are in the world of private equity. And I'll tell you, for a private equity firm in the public markets, there's been a lot of interest in Carlyle stock recently. What's the appeal?
Yeah, it's great. It's a buy recommendation, $74 target price. AUM is $465 billion. Probably the audience here didn't know that Jay Powell actually was an executive at Carlyle as well. So it's a storied company, kind of was a little bit late in moving into some of the other areas of private credit, real assets. They've done that. Yet 35% of their AUM is still private equity. New leadership, they brought in CEO from Goldman Sachs 2 years ago, new management team, more highly focused, and they are global as well. The opportunities for Carlyle at $465 billion of AUM is just better execution. And for investors, yes, the stock has done well, and valuation is still below really the premiums of the leaders like Blackstone, KKR, and others.
All right, Ken, appreciate that breakdown. Thanks so much for some interesting names to watch in alternative investing. Ken Leon with CFRA.